Okay, let's unpack this. The sources you've laid out, I mean, they paint a picture of a world just accelerating into the future.
At warp speed.
Yeah, exactly. It's all driven by AI, by this staggering amount of capital, but it's constantly hitting friction.
Right.
You've got regulatory handcuffs, major geopolitical risks, and, I mean, in one case, you have literal missing bolts on an airplane door.
And that tension, that's really the core of what we're looking at in this deep dive.
Mm-hmm.
Our mission here is to synthesize the key signals at this fascinating intersection of massive capital, radical innovation, and global governance.
Right.
We're going to look at everything from new Wall Street records all the way down to shifts in pharma and auto manufacturing. The key insight we want to give you is that sharp contrast between the, let's say, bullish tech vision and the systemic risks building up underneath.
So let's jump right into that bullish side then. The AI infrastructure arms race, the numbers are they're staggering.
They really are.
Elon Musk's xAI securing $20 billion. $20 billion from backers like Nvidia and Cisco.
And that's not passive money. This is capital earmarked specifically to build out foundational infrastructure, building on that Grok rollout.
Help us put $20 billion in context. What does that really buy?
It buys ownership of the foundational compute layer. And that layer is still, predominantly built on Nvidia hardware. They are the engine here.
They really are. And their recent CES announcements just showed how dominant they are.
Absolutely. Across so many domains, not just data centers.
They were throwing out product names left and right. We should probably define a few key ones for you because these are the components powering the next few years.
Let's do it.
Okay, so what exactly is the Vera Rubin architecture?
Vera Rubin is essentially their next-gen chip architecture. Think of it as the backbone for training these massive new AI models.
So for Grok or the next Gemini from Google?
Exactly. It's all about more speed, more efficiency in the core data center for that training phase.
Got it. Training the model. But then they also talked about Alpamayo reasoning models for level 4 autonomy. So what's the difference?
That's a crucial distinction. If Vera Rubin trains the brain, Alpamayo provides the intelligence for action, for inference.
Okay.
It's the software and hardware package that gives, say, a self-driving car the ability to perceive, process, and make real-time decisions. Level 4 autonomy means the car can handle almost everything on its own in a defined area.
So Alpamayo is what makes the safe decisions in the real world.
Precisely. And that's what makes their ecosystem feel so inescapable. They're not just selling chips. They are building the brain and the operating system for the entire industrial world.
Which brings us to the Nvidia and Siemens partnership. This is where that hardware power translates directly into industrial transformation, right?
Thus, they've deepened their collaboration to GPU accelerate E-Day.
E-Day, that's electronic design automation.
Right. The software engineers used to design microchips. So by accelerating that, and industrial simulation.
You can basically build the factory before you build the factory.
That's it. Simulation is the new factory floor. You can run millions of virtual tests faster, blueprint entire AI factories without laying a single brick. It's the industrial metaverse.
The digital twin.
The digital twin. And this isn't theoretical. PepsiCo is running pilots in the U.S. using these physics-based digital twins.
And the results.
They've already boosted throughput and cut capital expenditure. This is moving out of the lab and straight to the bottom line. It's the pinnacle of industrial efficiency.
Whoa, this is where that friction comes in.
Inevitably.
We jump from PepsiCo's incredible efficiency straight to a regulatory crackdown on generative AI ethics.
It's quite the jump.
Yeah, the same tech that boosts factory output can also, generate chaos. We saw UK and EU officials demand action after X's Grok chatbot generated non-consensual sexualized images.
The deepfake dilemma, slamming headfirst into regulators who are already struggling to keep up.
And that right there, it highlights a huge divergence in corporate responsibility.
Oh, absolutely. You look at rivals like Alphabet, especially with their Gemini tools, they have much stricter guardrails in place to prevent exactly this kind of thing.
So that difference in governance speed versus safety, that's going to be a huge factor in who earns public trust long term.
Especially as this stuff moves into more and more sensitive real-world applications.
Speaking of, let's pivot to the road and the factory floor. The drive for full autonomy is accelerating.
It really is.
We saw the unveiling of that production intent gravity-based robotaxi.
The Lucid, Uber, and Neuro collaboration.
Yes, and it's all powered by that Nvidia Drive Thor platform we just touched on.
And this isn't just some prototype on a stage. Bay Area on-road testing started last December. They're targeting full production later this year.
That is an incredibly tight timeline.
It is. The race isn't theoretical anymore. It's being run on public roads as we speak.
And at the same time, the factory floor is getting staffed by humanoids.
Right. Hyundai and Boston Dynamics demoed Atlas.
With deployments slated for 2028 in their Georgia auto factories. This is moving robotics from a niche thing into a core industrial process.
And here's that cross-industry synergy again. The intelligence, the brain, isn't from the hardware company. It's Alphabet's Gemini Robotics Intelligence.
For both Atlas and the little spot robot.
For both. So Alphabet is monetizing its core AI across its competitors' hardware. It's a brilliant move, spreads their risk and their influence.
Very smart. Okay, let's shift focus. All this innovation is happening against a truly extreme financial backdrop.
It really is.
Wall Street's hitting fresh highs, the S&P, the Dow, they're at records, and it's powered almost entirely by these mega cap and AI names.
Exactly. I mean, you just look at the leaders. Amazon up over 3%, Micron up around 10%.
Just riding that chip and AI wave.
Absolutely. The momentum is bullish, but when you look out to the 2026 forecast, the big institutions diverge a lot.
How far apart are they?
It's a significant chasm. Goldman Sachs is forecasting above consensus U.S. growth, maybe 2.6%, citing tax refunds, easier financial conditions.
Bank of America is bullish too.
Right, but then you look at J.P. Morgan, and they see a significant 35% global recession risk.
Wow. That is a massive disagreement. 1/3 chance of a global downturn versus robust growth.
And the key risk flag that all these forecasters are highlighting is this K-shaped dynamic.
Wow.
And it's a really essential concept for you to grasp.
So let's be clear about what it means.
A K-shaped recovery is where different parts of the economy recover or grow at totally different rates. The top arm of the K, that's sectors like big tech, AI, the highest earners.
They're skyrocketing up.
Skyrocketing.
Okay.
But the bottom arm of the K, that's small businesses, manufacturing, wages, they either stagnate or keep declining.
So it's not a unified recovery. It's structural inequality baked right into the growth model.
And making that even more complex is a huge global tax policy shift.
Right, the OECD amended deal.
Yes. It now effectively exempts U.S. multinationals from the 15% global minimum tax after talks with the Trump administration.
A huge win for giants like Apple and Nike. They get to keep enormous pools of offshore cash.
But tax watchdogs, well, they're not happy. They argue it just makes that wealth concentration at the top even worse. It just juices the top arm of that K.
Okay, let's drill down into some specific sectors, starting with this auto market paradox. Ford just had its best U.S. sales since 2019.
Sounds great on the surface.
It does. A 6% rise to 2.2 million units. But you have to look at how they did it.
The devil is in the details.
It is. Their hybrids surged up 22%. That completely offset a decline in their pure EV sales.
And the gas-powered trucks.
Their high-margin F-Series gained over 8%. It suggests consumers are leaning into the hybrid transition, not the full EV leap.
So on one hand, a great 2025 for Ford and GM, but the forward-looking signals are flashing red.
Analysts are warning about softer demand in 2026. Policy shifts, tariffs. 2025 might be hard to repeat.
It feels like the auto sector is bracing for a downturn, just as AI is promising to automate their factories. Another tension point.
Okay, transitioning to healthcare. This feels like a seismic pharmaceutical game changer.
Oh, the first GLP-1 obesity pill.
Novo Nordisk rolling out their Wegovy tablets in the U.S., an oral option for what has been an injectable market.
This is a monumental shift. The cash pay range is between, what, $149 and $299 a month?
Yep. And the trials were very compelling, an average weight loss of 14 to 16.6%.
That level of efficacy in an easy-to-take pill that creates a massive new market segment just overnight.
And the competition is already right behind them. You've got to watch Eli Lilly's rival drug, or Perglipron. It's under FDA review now.
That market is going to get very big and very crowded very fast.
Okay, let's look at how geopolitics hits the market instantly. Turmoil in Venezuela.
Always a factor. The U.S. president signaled support for reimbursing firms like Chevron and Exxon to repair Venezuela's oil infrastructure.
Which is basically saying, this is too costly and too politically risky for you to do alone. We have to backstop it.
And the market reaction was immediate and dramatic. Venezuela's defaulted bonds, which were basically worthless, surged to around 43 cents
Just on hopes of regime change.
in the prospect of restructuring. And that broader turmoil boosted energy stocks, CVX, SLB, and safe havens like gold and silver. It's a perfect example of how political instability directly drives market performance.
Okay, let's wrap up with corporate accountability, starting with the Boeing MAX 9 fallout. This brings us back to that operational chaos.
It does. We have the Alaska Flight 1282 captain suing Boeing.
And what's fascinating is the core of the dispute. It's about blame.
Right. The pilot alleges that Boeing unfairly pointed the finger at the crew.
While the NTSB, the actual investigators, found that there were missing bolts on the door plug panel, period.
And Alaska Air publicly praised their crew, which reinforces the pilot's claim. It puts the fault squarely on manufacturing oversight.
And meanwhile, another tech giant is scrambling its legal defenses.
Meta. They just appointed a new chief legal officer, CJ Mahoney,
Poached from Microsoft.
which is a big deal. And this isn't just a routine change. It's directly related to the mounting child safety litigation Meta is facing.
So bringing in a new legal chief is a signal. They see this as a critical, high-risk area that needs a fresh strategy.
An aggressive new strategy, absolutely.
And finally, rounding out these global friction points, sometimes it's the simple things.
Like the weather.
Exactly. Severe European snowstorms, 6 deaths, widespread travel chaos.
Over 400 flights canceled at Schiphol. Air France KLM had to cut early morning traffic in Paris just to clear runways.
It's a humbling reminder, isn't it? With all the digital twins and AI accelerators, basic infrastructure is still incredibly vulnerable.
It certainly is.
Before we synthesize all this, let's take a quick turn to the consumer side, because life goes on amidst all this.
Commerce continues.
Starbucks launched its winter menu, caramel protein latte, matcha, a new iced Dubai chocolate drink.
And bringing back the pistachio stuff, which is always popular.
And for the gamers and collectors out there, Hasbro's unveiling new magic, the Gathering decks.
The Lorwyn Eclipsed Commander decks, Dance of the Elements, and Blight Curse.
Launching January 23rd, the pace of product rollouts never seems to slow down, does it?
Never. Relentless.
So if we connect this all back to the bigger picture, what we're seeing is an economy defined by this incredible but very narrow high growth.
It's all driven by a handful of mega-cap AI names, your Nvidias, your Microsofts, and this prosperity exists in this profound tension with the instability and the failures we've talked about.
Right.
We are simultaneously hitting all-time financial records while managing these huge operational failures, whether it's air safety or chatbot ethics. It feels like the whole system is being pulled in two wildly different directions at once.
So what does this all mean for you trying to navigate this environment? We saw that unprecedented $20 billion for XAI.
Juxtaposed immediately against a critical legal shift at Meta because of child safety concerns.
The money is flooding into innovation, but the cost of liability is soaring right alongside it.
Which brings us right back to that K-shaped dynamic. And here's the final thought for you to consider. Will the enormous wealth being generated by the firms benefiting from that tax carve out your Apples and Nikes and the AI surge? Will it be enough?
Enough to offset the global risks, the localized slowdowns like the one forecast for the auto sector in 2026.
How does your own sector fit into that shape? Are you on that rising arm, benefiting from the acceleration? Or are you on the lagging arm, burdened by the instability and the high cost of just getting things right? That's the tension you need to strategically navigate.
A truly challenging question. And that's where we'll leave this deep dive.